for BCom Honors, BCom General, CMA Inter, and CA Inter students. Topic Depreciation. Join online class with Dr. Subrata Mukherjee. A company provides depreciation on plant and machinery at 20% per annum on reducing balances. On 1st April 2011, the balance in the plant and machinery account was rupees 5 lakh. It was discovered in 2011-12 that rupees 25,000 being repairs to machinery incurred on 30th June 2009 had been capitalized. Rupees 50,000 being the cost of a generator purchased on 1st October 2008 had been written off to stores. Directors want to correct the mistake while finalizing the accounts for the year ended 31st March 2012. A plant that cost rupees 40,000 on 30th September 2010 was scrapped and replaced with a more sophisticated one on 31st December 2011 by spending rupees 60,000. Scrap realized rupees 10,000. Prepare the plant and machinery account as it would appear on 31st March 2012 after providing the depreciation for the year. This problem, you have to rectify the balance as on 1st April 2011. The balance of plant and machinery was given at rupees 5 lakh on 1st April 2011. You need to make correction for the two wrong adjustment that has been done for rupees 25,000, which was for repair to plant and machinery, has wrongly been capitalized. So you need to find out what is the written down value of this rupees 25,000 as on 1st April 2011, and what will be the written down value for rupees 50,000 which was wrongly charged to profit and loss account during the financial year 2008-9 for rupees 50,000, that was for cost of generator. Now the written down value of this 50,000 on 1st April 2011 will be capitalized. So let us start the working first. So as discussed, you need to find out the written down value for the cost of repair that was wrongly capitalized. So let us start with the working. So this is working note number 1. So this is for cost of repair. Now the cost of repair was incurred on 30th June 2009. So this was the cost of repair on 30th June 2009 for rupees 25,000. So on 31st March 2010, less depreciation at the rate 20%. So 25,000 into 20% into 9 by 12. So this will be for 9-month depreciation, that is 3,750. So this was the depreciation that was charged on this 25,000 on 31st March 2010. So 1st April 2010, so written down value was 21,250. Now on 31st March 2011, depreciation you need to charge at the rate 20%. So 20% on 21,250 is 4,250. So depreciation is charged on written down balance method. So on 1st April 2011, the written down value of cost of repair that was wrongly capitalized was rupees 17,000. So we are going to reduce the balance of rupees 5 lakh which is given as the balance of plant and machinery on 1st April 2011 by rupees 17,000. Now this is working note number 1 for cost of repair. So written down value on 1st April 2011 is 17,000. Now next is the working note number 2 for cost of generator. So cost of generator. So cost of generator was acquired on 1st October 2008. So cost of generator was rupees 50,000. Now this was wrongly written off and it was charged to profit and loss account for rupees 50,000 during that year. So what will be the written down value for rupees 50,000 had it been recorded in accounts? So let us find the written down value of the cost of generator on 1st April 2011. Now on 31st March 2009, less depreciation at the rate 20%. So this will be 50,000 into 20% into 6 by 12. So depreciation will be charged for 6 months. So that is 5,000. So 45,000 is the 1st April 2009. This is the written down value. So 45,000. Now on 31st March 2010, less depreciation at the rate 20% is 9,000. So 36,000, the written down value on 1st April 2010 for this cost of generator. So on 31st March 2011, less depreciation at the rate 20% will be 7,200. So this is 28,800 is the balance on 1st April 2011. This is the written down balance. Now, the third working is regarding the plant and machinery ledger. So plant, so you can say it as a working or it can be continued as a problem. So plant and machinery ledger I am preparing here. Account. So balance on 1st April 2011 given as 2 balance BD. It is given as rupees 5 lakh. So the cost of machinery account, the balance of rupees 5 lakh is given on 1st April 2011. But there are 2 adjustments that has to be done with this rupees 5 lakh. One, the cost of machinery, the cost of repair that was wrongly capitalized. So you need to reduce the cost of repair. So by PL. So this 17,000, the cost of repair, the written down value of rupees 17,000 that I have shown you in the working, it is included in this 5 lakh. So you have to remove that rupees 17,000. So PL account debit to plant and machinery account. And the 28,800, that is the cost of generator, you need to incorporate in plant and machinery account. So to PL account is 28,800. So your journal entry is PL account debit to plant and machinery and plant and machinery account debit to PL. So we got the actual balance of plant and machinery on 1st April 2011. So this is 5 lakh plus 28,000 is 5 lakh 28,800, and this is also 5 lakh 28,800. So actual written down value of plant and machinery on 1st April 2011 is 5 lakh 11,800. So the transaction which carried out on plant and machinery during the year 2011-12 we will record here in below. Now let us show the fourth working. So what happened here? So machinery 1 that is going to be replaced. So on 30th September 2010, a plant was purchased for rupees 40,000. So I termed this as M1. On 31st March 2011, depreciation was charged on this. So 40,000 into 20% into 6 by 12 will be 4,000. So on 1st April 2011, written down value was rupees 36,000. So you have a plant balance of plant and machinery on 1st April 2011 as 5,11,800. So the balancing figure, I give it to M2. That is, I turn the balancing figure of 5,11,800 minus 36,000. That will be 4,75,800. See, on 1st April 2011, the plant machinery account had a balance of 5,11,800 that we have calculated. The correct balance of plant and machinery on 1st April 2011. Now you have to split this balance into two parts. One is M1 and the balancing figure is for M2. So M1, the written down value is 36,000 that is going to be replaced by another machine that is M3. So one written down value as on 1st April 2011 for M1 is 36,000 that I have calculated. This plant was purchased on 30th September 2010. So cost less depreciation, written down value. So the remaining figure is for M2. So how I arrived at this figure? So 5,11,800 is the balance of plant and machinery on 1st April 2011 minus 36,000. So 5,11,800 minus 36,000 is 4,75,800. Now the first machinery which was purchased on 30th September 2010 was scrapped on 31st December 2012. So let's see. So on 31st December 2011, so depreciation was charged on 36,000 into 20% into 9 by 12. So this figure is 5,400. So the written down value of M1 is 30,600. Now this was scrap value. So 30,600 is the written down value. Now this was scrap for rupees 10,000. So you have incurred a loss of 20,600. And on the same day, that is on 31st December 2011, another third machine, that is M3, was purchased for rupees 60,000. This was the cost incurred for M3. Now on 31st March 2012, less depreciation. So on 4,75,800, 20% depreciation will be charged. So this will be 95,160. And on 60,000 into 20% into 3 by 12 will give you 3,000. So total depreciation on 31st March 2012 will be 98,160. And the written down value on 1st April 2012 will be 3,80,640 for M2, and this is 57,000. So total written down value will be 3,80,640 plus 57,000 is 4,37,640. Now let us put the working number 4 in the plant and machinery ledger. So let's come to this ledger of plant and machinery account. So I have already calculated the balance on 1st April 2011. The correct figure of plant and machinery was 5,11,800. Now on 31st December 2011, plant whose cost was 40,000 that was purchased on 30th September 2010 was sold out for rupees 10,000. So the depreciation on rupees 40,000 is 5,400 by depreciation account. Then by bank account is 10,000. By PL, that is the loss on sale, is 20,600. Now, on 31st December 2011, the third machinery was purchased for rupees 60,000. So, plant and machinery account debit to bank. Now, on 31st March 2012, by depreciation 98,160. That is the depreciation on M2, that is 95,160 plus 3,000 the depreciation on M3. And on 31st December 2012, by balance CD is 3,80,640 plus 57,000 is 4,37,640. So if you add the debit and the credit side of plant and machinery account, this will give you 5,71,800. So 5,71,800. 5,71,800. So let me show you again this plant and machinery account. So to balance BD on 1st April 2011, the correct figure that we have calculated as 5,11,800. Then on 31st December, the plant that was purchased on 30th of September 2010 was sold out for rupees 10,000. So by depreciation 5,400, then by bank 10,000, then PL account 20,600 is the loss incurred on the sale, and the amount of depreciation was charged on M2 and M3 as 98,160, and the balancing figure is 4,37,640. So this is the entire working in one screen I have shown you. So the first working is regarding the cost of repair that was wrongly capitalized. The second working is the cost of generator that was charged to profit and loss account. The third working is regarding the plant and machinery ledger. And the fourth working is the transaction that took place in the year 2011-12. Thank you. Thanks for watching the video. If you like the channel, then subscribe the channel to get regular updates